What's going on, YouTube? Welcome back to the channel. If you are new to this channel, I am Ralph the Trader, and on this channel, I'm only here to document my journey. I'm also here just to motivate you guys and to inspire you guys. And I also like to go over some trade breakdowns that I've taken throughout the week. And today's video, I just want to go over a GBP USD and a NAS 100 trade. I did not take either one of these trades because I just wanted to test out these institutional levels that I talked about on my last video. And I back tested it this weekend and it was spot on, but I just wanted to see it for myself in real time, and it works. It actually works, guys. So I've implemented it into my trading. I don't use indicators, so only thing I use is those institutional levels, and I like to use the daily high and daily low, the weekly high and low levels, and that's just an indicator that is programmed on the MT4 that you can plug in if you want to, so that way I just don't have to go in and continue to marking up the daily and weekly high and lows. So with that being said, I want to get into this video and show you guys that this stuff actually works. All right, so let's get to it. All right, here we go. We're going to start off with GBP USD. And like I said, the first thing you guys need to do when you come to the market is you need to identify if you're going to be bullish or you're going to be bearish. And for me, when I went to the higher time frame, I noticed that GBP USD was in a downtrend. So coming to the market, I'm a bear. I'm looking to sell. All right. But if you were coming to the market and you wanted to buy, I'm going to show you two trade setups that you could have taken for the buy. And also, if you don't know how to identify the trend, you go back and study. You know what I mean? That's one of the things that you need to do, because you need to trade with a trend. But in order to identify the trend, you can go to a higher time frame, or you can throw the 50 EMA on there, or you can throw the 200 EMA on there, whichever one is your preference. All right. But as you guys can see, let's get into it. I have the 850, the 750 as my resistance institutional level. That's the 750 level. And we always do these levels at the whole numbers. All right, guys, the whole even numbers. All right. And this support is at the 850 level. So that's 1.38500. The resistance is 1.3875. All right. So those are the whole even numbers. These are institutional levels that the banks trade at, and these are your real support and resistance level. Like I said, I back tested and it actually works. So it works for me. You know what I mean? If you want to try it out, but it works, guys. And I'm just going to go over this trade and just show you guys. So as the market opened up on Sunday, we can see that the market was accumulating in between the support and the resistance. So we was actually accumulating in between the 850 and the 750 level. And from the 850 to the 750 level, guys, I have these marked off as 25 pips. I like to get 20 pips, but I did it at 25 because of the spread. So this from support to resistance is 25 pips. All right. So as you can see, guys, when the market opened up, the market started coming down. So we have a high, we got a low, we got a lower high, we have a lower low, we have a lower high, we have a lower low. So inside of this accumulation, we was forming a downtrend. And as you can see, when the market got to this point, to 850 level, it respected that level, you guys. Then price pushed back up, price came right back down to our level. Price finally broke through our level, but as the next candle came, price pushed right back up into our level. Then price pushed right back down to our level and created this low. And so far of the day, this was the lowest point that the market had went. And as you can see, when price next candle opened, price came back. Price did not break this low. Price pushed right back down. So for me, I like to mark this up. I like to mark these up. I like to mark these zones up on my 30-minute chart. Once I see price get to a certain point, so I can pull back. So as you guys can see, price came down here. This was, like I say, this was the lowest point that price went. Excuse me, guys, that was my kids, my son playing around. But I want to show you guys that this trade that you could have taken, this was with this setup. And because I want to show you guys that this actually came down and made a W, and price Here it is. There's the W, guys. It's not always going to be a perfect W, but if you know, you know. You know what I mean? If that's something that you like to trade, you'll see it. So as you can see, price pushed down, price pushed up, price pushed down, then price pushed right back up, you guys. That's a W. I'm gonna go to the line chart so you guys can see it clearly, okay? So as you can see, guys, this is when the market opened up, all right? And market came down, did what it need to do, and this is the W, guys. You see the W? Price came down, price pushed back up, price pushed right back down, and you could have took an entry right here. But if you was not sure, you know what I mean? If you was not sure because, you know what I mean, you weren't sure, all right? But this could have been an entry right here on this candlestick. And like I said, if you was not sure, just get in at a smaller lot size, or get in at a 1 cent, 2 cent, you know what I'm saying? Just in case if it does not go your way, you know what I mean, you won't lose that much, you know what I'm saying? So, but me personally, if I was looking for buys, I would have took this entry right here. But if you was not sure, just wait until price break the neckline. That'll give you a nice, perfect entry. And this is the neckline of the W, guys, because as price came down, price pushed back up, price came right back down. So this is your neckline of the W. So for this, if you once you get that once you mark that up, that neckline, so now all you're doing, you're waiting on a break and a retest of the neckline, and then you can take it on up. All right. So that's our neckline right here, guys. So I'm gonna go back to the candles. And as you can see, price came down, price pushed up, price pushed back down, price came back, price opened up here. And like I said, I would have taken the trade here. I'm gonna always wait until when the trade, until when the candle opens, and I'm gonna see how far that it pulls back. So once I see that it pulls back and momentum starts to come back my way, I enter. So I would have entered in on this candlestick and rolled this all the way up. And that's a good 20 pips right there. Cash me out. If you wanted to wait, you could have just took it all the way here. That's 25 pips. You know what I mean? That's a good entry right there. But like I said, if you wanted to wait until it breaks this neckline of the W, and here it is right here. You got a breakthrough and a reach. You got a breakthrough and a retest. And where did it retest? It retested our neckline and it retested that the 38.50. Retested that 38.50, the 850 level, that institutional level, guys. Price retested and rejected off that level, slingshot right on off of there. So you could have entered this trade right here, because you always want to get in at the lowest point, and if you're selling, you always want to get in at the highest point to limit your drawdown. So you could have entered into this trade as momentum starts to pull up, and you could have went ahead and you caught you 15, 16 pips. That'd have been a nice move for you right there. All right. So if you missed this buy, signal, then it gave you another one right here. You got a breakthrough of the 850 level. You got a breakthrough. Now, if you're a break and retest trader like me, then you're waiting on the retest. So you got a breakthrough, and you actually got a break and retest in this one candlestick. But if you need to wait on that full retest, you got a breakthrough. You got a retracement right here. When and where the price come back. Price came right back to the 850 level, rejected. Price came right back on the next candlestick, came a pip, a half a pip or whatever to that 850 level, but it rejected the 850 level again. So the next candle opened up, engulfed this candle. All right, so you got to engulf this candle. So now you got your break, you got your retest, you got a confirmation right here. Next candle open up. Most people enter into the trade here, but like for me, I don't like to get into trades in the middle of my zone. You know what I mean? And plus, I know that if I would have took this trade in the middle of the zone, I know that price was going to stop at this resistance level, because as you can see, when the market opened up, the market rejected this level already. So that just gave me a good indication that the market was not going to break through this level. And as you can see, the market pushed up and it never broke this level. So like I told you guys, I like to get in at the lowest and the highest point. So I'd have waited till this candlestick open, see how far it would have pulled back. And as you can see, it pulled right back to the 850 level, rejected, slingshot it off of there. And guys, from there to there, that's 25 pips. From the 850 to the 750 is 25 pips in price gate. And it gave you a good 26 pips. That's enough pips for you right there, guys. Cash you out. But like I said, when I came into the market, I was bearish. All right, so I was looking for a sell. And as you can see, when the market slingshotted from here and came up to the 750 level, I'm telling you guys, these institutional levels are very powerful, man. And I just thank Third Eye for that, man. I really thank Third Eye for that there, because he's really helped my trading out with these institutional levels, quarter theory, bank, whatever you want to call them, guys. They support data, real support and resistance. And as you can see, price rejected at 750 level. Next candle opened up, price rejected at 750 level. And if you guys are looking at it, if you study candlesticks, and I encourage each and every one of you guys to study candlestick patterns, this candlestick pattern right here, this is a bearish tweezer top pattern. And a bearish tweezer top pattern is a reversal pattern, guys. So you got a rejection, just created your tweezer top. So this is letting you know that price is friendly reverse, because when price came up here, price actually formed an uptrend. You got a low, you got a high, you got a higher low, higher high, higher low. So now price gave you this bearish tweezer top, where price is finna reverse. So as price came down, this candlestick closed. Next one open, it pulled back. This could have been an entry if you didn't want to take that with this spinning top. You know what I mean? You didn't have to take that. All right. If you missed it, and the price came here and gave you this this doji candle, this indecision candle, but you could have taken it here. Stop loss could have been back here, or you could have taken it here. And as you can see, me, I like to, like I said, I like to mark up when price stops on my 30-minute. And as you can see, when price came, price stopped here, so I marked this zone up. And as this candle here, as this candle opened, it pulled back. So this could have been a clear entry for you guys, because like I said, you want to get in at the highest point, and you want to sell at the highest point, and you want to buy at the lowest point. So this would have been an entry for you right here. Stop loss would have been at this last high. So you could have taken it here and could have rolled this all the way down. And that was a good 40 some pips. But if you wasn't sure, you know what I mean, you could have waited to this candlestick here completely finished and jump in on this next one right here, because you got the confirmation with the bearish tweezer top that this was reversing. So you got confirmation right there, and you could have taken it here and rolled this all the way down to here. That's a 29 pips. All right. So once price got down here and stopped and started pulling back up, I marked that off, because I like to know why price stopped. So price stopped here, next candle open up, pull down, and where did it stop at? Same place that the previous candle stopped. So, and what did price do? Price created a bearish tweezer bottom, a reversal pattern. So price is letting you know that it's finna go back the other way. All right, it's letting you know it's finna go back the other way. So price shot up, pulled right back down, and like I say, price stopped at this. If you look, if I pull this here all the way over, price stopped. Price went right back to that zone. As you can see, price went right back to that zone from earlier. Went right up, tested that zone, and pulled right on back down, you guys. So as you can see, but like I said, we created a bullish tweezer bottom. A bullish tweezer bottom. This is letting you know I'm finna go back up. All right. So you could have waited until this here candle finished, and you could have entered in on this candlestick. And where do you think it was going to go at, guys? Right to that zone that we marked up. So you could have entered in on here, taking this all the way up. That's another 25 pips. Cash you out. Cash you out, guys. All right. So now let's go to the NAS 100, and I want to show you guys that these institutional levels work with the NAS 100. All right, so here we go with the NAS 100. And like I told you guys earlier, only thing I have on my chart is these institutional levels, and I love the daily high, daily low, weekly high, and lows. All right, and as you can see here clearly, as you can see, guys, check it out. Price, when the market opened up, price broke above the 125 level, this institutional level. And immediately price dropped right back up underneath this institutional level, the 125 level, rejected, 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 rejected. So you got 1, 2, 3, 4, 5, 6, 7, 8 rejections. Guys, it's not breaking through. Not right now. Anyways, it is not breaking through. This is letting you know this is a strong level of resistance. All right. So as you can see, price shot down, came down to the previous day's low, which was this was the low of Friday. This is the lowest that the NASDAQ went on Friday. Price shot down. Boom. Price pulled right back up. Price shot right back down. So if you're looking at this, what did this do? Price shot down, price shot up, price shot down, price shot up. So price actually made a W here. Came down, came up, came down, came up, but price fell to continue with this W, because if for this price to continue with this W, it would have to break the neckline, retest, and shoot back on up. All right, but it failed. This was a failed double bottom pattern right here. All right, but as you can see, when the price opened up, price came right back and rejected the 125. And the NASDAQ, I have these marked up as from resistance support. This is 125 pips. 125 points, guys. This is 125 points from resistance to support. And really, you don't even need a whole 125. You can get you about a good 75, but if you want to eat all of it, you know what I'm saying? But as you can see, price rejected that resistance. And where did price come to? Guys, where did price come to? Price came right down to the 000, right to the 000, broke through the 000 and came right to the weekly. Guys, I'm telling you, this stuff works. It works, man. If this stuff does not change your trading, I don't know what to tell you, but this has definitely changed my trading. I actually saw this stuff in real time, and it works. So price came right down to the weekly, broke through the weekly and stopped. So I mark this off right here because, you know what I mean, I got this wick rejection right here. So this can be a break and retest if you're a break and retest trader like me, because you look for strong wick rejection. And like I say, you got a nice wick rejection right there. And next candle open up, price actually created a bullish tweezer bottom right here. We got a tweezer bottom pattern right here. So price is letting you know right here on this candlestick that I'm reversing. I'm going back the other way. So once this candle here finished, you could have hopped in on this candlestick right here. This would have been your entry. And you could have rolled this thing all the way in. Where did price go, guys? Price came all the way back to that 125 institutional level. But if you wasn't sure on taking this right here, you could have just waited until it got to the 000 level. Price came up, broke through, retest. You could have entered here. If that's not your entry, wait until price get next candle open up. Wait on that pullback because you want to get in at the lowest point. So price got here, price pulled back, take the trade. Take the trade, man. So as you guys can see, man, as you guys can see, those institutional levels work. They work, you guys. So I just encourage you guys to go and implement it on your chart, go and back test it like I did. And it actually works. All right. It actually works, you guys. So if you like this video, man, give me a thumbs up. Hit that subscribe button, and be the reason somebody smiles today. Be the reason somebody smiles today. Peace and love, family.